Welcome traders. So yesterday I held a live streaming day trading session for the US Open. I will leave the link for that up here somewhere on this side of the screen around about now so that you can go through that. It's about 40 minutes, but you can go through it. And it's I think a good example of price action trading. But at the same time, I think there's so much in there that I'm not sure that you can retain it all. So what I thought I would do based off the back of that is do a little video now with a bit of price action analysis and then kind of just do these every now and again to kind of supplement, because you need to see a lot of it to pick up the process. And so I've taken up dollar yen, doesn't matter which one it is, but I've just picked dollar yen for now. And this is my new day trading layout. I've revised it from yesterday. So I've got a 1 minute, 15 minutes, 1 hour, and a 4 hour. I'm not worried about the daily at this time. Because yesterday because we were doing it in such a short window, we looked at 1 minute trade setups. We could have used tick data, but 1 minute data is fine. And it doesn't matter what platform you do it on. Doing it on an MT4 platform is absolutely acceptable. It's not a problem. The real priority is that you have tight spreads. That's a very big thing when you're trading on the lower time frame, day trading. So let me break down the price action logic. Let me just give you some kind of analysis on that. Okay, so first of all, we're looking at it. Again, the time frame doesn't matter per se, but with regards to this being the guide for the direction of the day trading session, it can help with that. Okay, so first of all, let's have a look at this. So we could see that price action has these rejections in this area, which we don't really know is significant until we get back here. So then what happens is we get two sort of touches in this area, and then you can kind of put in the support resistance line. Then you can put it in and go, okay, yep, as you put it in, you kind of go, okay, that's effectively a double top. So what does that mean? It means that you can see the response of the wick here plus the bodies of these two candles. You can see that they line up with that, and you can see the two wicks here. So that becomes a double top pattern in isolation. Not only that, but you can also see, incidentally, that the MACD drops between the two. So you've got roughly equal highs on price, but you've got a drop in the MACD, which is a bearish reaction. Then it gets really interesting to me. Here together, I just removed this video. Hold on a second. This tool, hold on. Okay, so I'm just gonna highlight these two little touches here, which is the interesting thing about this is that that's a miniature double top. Price came up here, came up, rejected again. And you've got very nice solid rejections. You can also put in a little bit of a line here as well. You can kind of see that everything fails below this level. Now, when it comes to day trading, you need to observe these levels. You have to do that. Where price fails to get below a level, where you see that kind of behavior, is significant. And there's a couple of other things that happen. You get a little bit of consolidation in this area, then you get a bit of a bearish move that signifies it's either going to be a bullish breakout to the upside, or it's going to be a bearish move the other way. And usually what that is it's a bit of a consolidation in this area, and then it is an attempt to get out of that consolidation. Now, most of the time, that will follow through. Not always, but way more often than not. So it's safer for us in terms of probabilities to just go with it. In other words, our goal as a day trader, ladies and gentlemen, is to trust the market. The market will signal to us what it wants to do. Whether it succeeds or not is not a question of it's lying to us or it's trying to trick us. It will attempt what it's trying to do. And if we go with that, if we trust that we're reading it correctly and that it's signaling what it intends to do, you will find that most of the time the market will actually follow through on what it says. Now, the next rule on day trading, I can't emphasize enough how important this rule is that we're not looking for a big long-term trend. We're looking for a move, a single move. This is probably one of the golden rules of day trading. You're looking for a single move, 3-to-1 or 4-to-1, but you're looking for a single move, and you're going to take and that's your single trade. You might take multiple trades, you might take other trades after that, but you're looking for a single move till you hit your target, and you will close out that trade. If you don't do this, you cannot ultimately make money day trading. You have to understand that you're trying to catch a fish. When you catch the fish, you don't throw it back in the water, you don't let it run for a bit. Once you've got it, you pull it out, you take it. It's done. You might get two small fish, or one big fish, or a big fish and a small fish. But if you don't take them out, if you don't capture them, if you don't capture those profits and close those trades, your account can never grow. And in fact, you get into the habit of not doing it, and then you're just never capturing it. So you need to also it's a mindset thing. It's a catch and kill. You've got to find it, you're in profit, take the profit, get used to that. It's a mindset you have to learn. Everybody can learn it. We've survived, you know, hundreds of thousands of years of evolution. We can do this. So this is what happens. So you get a bigger picture double top with a bit of bearish divergence. And look at the behavior here. Consolidation, breakout candle, follow through. Then it tries to go up again, then it waffles a bit. Now you've got another consolidation, then you get a breakout candle. And then it follows through, then it tries to recoup again, then you get another breakout candle, and then it starts, all of a sudden you've got more green here. So then it starts to go back up, starts to stall a bit in this area. You get a breakout candle here, follows through, another push back, another follow through. Now there's a very interesting shape happening here, which I didn't see. So some of these things I didn't see in real time, but actually you start to get this impact. This is what made me decide to do the video. There's a lot happening here. You've got a bearish candle, a bullish candle that goes up, but it's still lower highs, lower lows, so it's still a lower candle. You then have an attempt to get up that fails, and then you get a series of lower highs coming in here. Bearish candle, small candle. It basically is compressing into this, and it breaks out of this little area. Breaks out, comes back up to test this area, and continues down. Now, believe it or not, that's one of the things that we did yesterday. It's one of the trade setups for yesterday. It was a breakout and a retest and a continuation. But also there's a little bit of a level here and a breakout. So there's all these repeated movements between the market that's moving and then stalls and then moves and reverses and stalls and moves and does all the same things over and over again. So this is very, very cool. There's also a couple of other little things as well. So there's smaller little patterns. You've got a small little consolidation here and a breakout. Very, very cool. You've also got excuse my pooches, making a noise. You've also got this little section here where price breaks through, comes back and retests it. So that level becomes support, which becomes resistance. And you've got, basically, that's just kind of how the market tends to move. And so the weight that keeps carrying it further and further and further to the downside comes from the bigger picture. So the bigger picture is we've got this double top and another little double top, and then you started to break through that. We started to break below these lows. So we break our channel, we come and retest this. All of these are kind of, there's a lot of information that is coming through in all these different things. And I know that Al Brooks does his style of stuff, and he's groundbreaking as a pioneer, and he's the single biggest contributor to price action trading following Steve Nissen. Or at least from when he started. I think since then, I think there's a couple of people who've added to that. And that's the thing, is it's really that we build on top of each other. We build from that. But this kind of behavior, I think, is very constructive. The next thing you can see here is, although we had a little bit of support in this area, we've kind of broken through here. And so for now, that's all I really wanted to say. You can see again here, you've got a bit of a consolidation area here. You've got the breakout, and then this is what I call a pause and go. You get a move, then a candle that doesn't go anywhere, then a follow on from that. It's a pause and go. So that's just a personal one that I kind of call it. You get a couple here as well. So you get these moves. But again, here as well, it's beautiful. You get a breakout, you come back, you retest this. This is bullish, then it goes sideways, but these are all generally more bullish. This is bullish, this is bullish. So all the way through here, and this is what Al Brooks would be doing. He'd be saying, well, that's bullish, that's a bullish signal. And so one of the ways in which, and this is for people who are fans of Al Brooks or debating whether you would go through Al Brooks. Honestly, I've been influenced by other people way more than Al Brooks. So I respect him as a contributor to the art of what we do, but he has not been the single biggest influencer in my life at all. I feel that he's a supplementary contributor to that. I find that one of the best ways to start to do this is to talk yourself through this, kind of observe all these little things here and take and then kind of observe those. But you need to be taught things. You need to be, somebody has to say to you, look at this breakout candle. Someone has to say that to you. And then you start to pick it up intuitively. You start to do it. But believe it or not, there's only a finite number of things that can happen in a chart in price action. There are not a million different things that can happen. There's probably a few hundred things that can happen, and that's it. So once you learn all those, you start to be able to read what's happening. So let's talk about what it's here, and then I'll wrap up the video because we'll keep it about 10 minutes or something. Here we've had a breakout. The only problem now is that a lot of move has actually occurred here. A lot of the move has occurred here. So we've broken below these lows. And actually what would make sense here, guys, is potentially for price, the next candle. Ugh, I hate it when I do this. The tool is supposed to revert back to the, it's just supposed to stop adding lines onto it. So this actually makes quite a bit of sense. It's highly likely that there will be another candle shape or another candle that will overlap with this one, if it's going to carry on down. Okay, if it's going to carry on down. Okay, it doesn't want to do that. And that this would be it. So it's potentially going to be that if this is where it closes in 2 hours, 21 minutes, for example, It would then overlap. We could see another one potentially there. It could also come back in line with this one. So you kind of want to highlight the different areas where it could come back to you, if that's going to be the case. And then we would see where it's going to possibly come across and tap at that. So in other words, what would happen is that means that this area is where I would be looking for continuations, because this is overextended. So now I'd be looking for price to come back into this area and come down. So let's go down to a lower time frame very quickly so I can wrap this up. We go down to the 2 hours so you can see what it looks like. There's your 2 hours over there. Let's go back. Let's go a little bit further down to the 1 hour. Looking a little bit further down. So here you can see there's a failure in this area from this candle. So again, I'm looking for price to come into this area, start to head down. Let's go to 15 minutes. So now you can start to see what's happening. It's had its big move, slowing down a little bit. It's forming a little bit of a base here. So again, we've got a little bit of a base that we could identify here. And so it's either going to hold here or it's going to break down and go further. Because as I said, the market, the 4-hour bar is either going to stop where it is here, or it's going to potentially come down to this level, which is the next level. So it's one of those two it's probably going to do. So this could hold, might end up forming here, coming back up here for the next 2 hours, and then continuing down in the next candle. That's a possibility. I think that's unlikely. It's either going to go sideways or it's going to go down, potentially. There's only three things. Remember, it can only go sideways. So now there's the 4-hour candle stays where it is. It breaks through here now, goes down to there, so the 4-hour candle is a little bit further, or potentially does break up here, and then suddenly you've got a rejection candle. I think the first two are the most likely outcome there. So this is what I'd be looking for. In fact, even right now, we could potentially be looking at a break of this level, a break, and then a retest and go down, if it's going to do that. So then what we do is, let's go down a little bit further. Let's go to the 5 minutes. You can see that this kind of level is trying to hold. We've got a bit of lower highs coming in here. What would I be looking for here, guys? I'd be looking for a breakout candle potentially there, and I'd straight to the 1 minute. Straight to that 1 minute. So what I'm looking for again in this area, you see we've now got a potential high-low, so it's really trying to stay around this area. Again, I would rather see a bit of a break, like a bit of a candle like this, break below this low now, because if it broke below this low, it's now investigating fresh lows again. Here it's trying to decide which way to go. So if it tries to go up, then can't get up there, then comes down and breaks that low, then it's either range bound or it's actually exploring the idea of going further down. And then I'd be looking ideally to target. But the problem is we might not get our target. So then the goal would be ideally you would get in on the break of this low, stop loss above the high somewhere. You're not really going to get a 3-to-1 before you get to that level. So it's not a high probability trade setup. The moves are, most of the moves already happened. You can see the big move has happened. Consolidating. We're getting into the late afternoon now, so that the US session, the UK session is slowly starting to exit the US session. There's a whole lot of reasons to not take it. We haven't got a 3-to-1 to the next level, and you can see it's trying to push up now. So probably I would leave it till the UK session tomorrow morning or the US session tomorrow afternoon. Anyway, I'm going to wrap that up. I hope that you found this instructive and useful. And if you did enjoy the live session, let me know, and I will then schedule another one. One last thing, on the community page of my YouTube channel, I actually, if you didn't see it, I did an outcome of the session. So you can see where all of the markets did, and actually, interestingly enough, pound yen actually did hit target, continued lower today. So the only losing trade out of that was dollar CAD, and the only one I really logged officially was pound sterling, pound yen, and dollar CAD. So we had a losing dollar CAD, winning pound yen, sterling and pound yen. And actually, I also commented on euro dollar. I didn't realize I put it in, but it wasn't an official trade idea. Also hit target. So I wanted you to see if this was the case. Now, if you enjoyed that session, this is where you can comment. Okay, give me some feedback. This is where you can comment, or you can comment on the session on the live recording comment section if you could do that. That's it. Thank you very much, and I'll see you in the next video.